Well, number one, support and resistance. Using the value area not only allows us to see the most fair prices, but also provides two interesting levels of support and resistance. These levels are the value area high and the value area low. These levels tend to be reactionary in the form of support and resistance. These levels allow us to see where we can expect either a reversal or the beginning of a consolidation period. Attraction. When speaking in terms of volume profile, we can see potential areas where prices can be attracted towards. High volume areas are like magnets or gravity. They pull prices towards those ranges. We see examples of this every single day. When speaking in terms of market profile, it is the same as the volume profile. What makes market profile unique versus the volume profile is that it is a profile based on time, not volume. Volume can decrease and increase, which makes it reactionary to market events. Time cannot be slowed down or sped up, making it less reactionary to swings in the market. And also rejection. In terms of volume profile, we can see potential areas where prices can be rejected. High volume areas or high volume levels occur because there is a lot of trading activity inside those prices. Low volume areas occur because there is very little trading activity at those prices. Those areas are rejection areas. Usually when we see prices go into low volume areas, we'll see one of two things. We'll either see resistance or support, or we skip right through that area into the next high volume node or high volume area. Let's have a look at these components through an example. Here is a market profile chart of the S&P 500 futures. We're seeing multiple sessions profiles. So the first thing I'm looking for is support and resistance. And where to find that is using the value area highs and the value area lows. Here I can see a value area low. Here I can see both a value area high and a value area low. Next thing I'm looking for is areas of possible rejection. We can see here we have a low volume node, and also areas of attraction. Here we have a lot of volume. So noticing that prices opened here in the S&P 500 around 24.22, looking at these areas, I can safely assume that we should have resistance between 34 to 36. So I'd be looking to sell that area. Let's see what happens in the example to come. So you can see, looking at price action, this is where we had the value area low. Here's where we had the value area high and the value area low. Here's where we have rejection. Here's where we have attraction. So we wanted to be sellers between 34 to 36. And look at the reaction to the value areas marked. Prices enter the area, quickly exit, and move towards an attractor or a high volume node. And this is a great example of how to use these components and why they're so important.